Hello, and welcome to NYU's Office of Financial Aid webinar on federal direct loans. We would like to congratulate and extend a warm welcome to the students and families of the class of 2030. But before we get started, we'd like to introduce ourselves. Hello, my name is Zarina Smith. I have a bachelor's in English literature from the New School. And a fun fact about me is while I'm left-handed, I place my mouse on the right side of my computer.
Hello and good evening, everyone. My name is Felicia Molzen. I am a financial aid counselor here within the Office of Financial Aid. I have my bachelor's in anthropology from SUNY Binghamton University, and I'm currently in the Master of Higher Education and Student Affairs program here at NYU. A fun fact about me, I do have a little snow globe collection that's currently growing with snow globes from 8 states and 3 countries.
Hello, all. My name is Jonathan Rivera. I have a master's in organizational leadership and business and a bachelor's in business administration. Fun fact about me is I do quite the Sean Connery impression.
That he does. U.S. citizens and eligible non-citizens who complete the FAFSA may be eligible for optional federal direct student loans through the federal government. You can find detailed information about all of these loan options at the federal site studentaid.gov. However, today's webinar will provide basic information on the federal direct loans that may be offered on your Student Financial Aid Award. We'll talk about the different types of direct loans, what is needed to secure the loans for disbursement, interest rates and loan fees, annual and lifetime loan limits, as well as other key points of interest. The information provided today regarding the Federal Direct Loan Program takes into account changes to the program as required by the One Big Beautiful Bill Act, effective July 1st, 2026. While it's based on our good faith understanding of the evolving federal standards, it is not official guidance and should not be regarded as definitive. Students and parents should refer to federal governmental resources such as studentaid.gov for official guidance. During our presentation, please use the Q&A chat to ask questions. We'll now begin with some highlights regarding federal direct loans.
To be eligible for direct loans, students must meet basic eligibility requirements, such as filing their FAFSA each year, be a U.S. citizen or eligible non-citizen, meet enrollment requirements, such as maintaining half-time status, as well as meeting satisfactory academic progress. This means earning a passing grade in a minimum of 67% of the credits earned and maintaining a cumulative GPA of 2.0 or higher. Federal student and parent loans are funded by the federal government and not a private lender such as a bank, credit union, or state agency. These loans have terms and conditions that are set by law and include many benefits, such as fixed interest rates and flexible repayment options, that are not typically offered with private loans. There are direct loans available to student borrowers as well as parent borrowers, and they can help families to cover the cost of attendance that remains after other forms of financial aid are deducted from the student's bursar bills. More information on upcoming changes to annual loan limits and how they may affect your eligibility to bridge that gap is coming up shortly in this presentation. Students do not need credit history or cosigner for direct subsidized or unsubsidized loans, and loans can be paid off early without any penalty. And there is a 6-month grace period after graduation before student loans enter repayment.
Now we're going to talk about the different types of federal loans that may have been offered to you. For undergraduate students, there are three types of federal loans: the direct subsidized loan, direct unsubsidized loan, and the direct Parent Plus loan. Both the subsidized and unsubsidized loans are borrowed by the student. Not all students will be offered a subsidized loan as it is need-based and is offered based on financial need as demonstrated by the Student Aid Index, or SAI for short, on the FAFSA. The subsidized loan is the most advantageous of the federal direct loans as interest does not accrue after disbursement of the loan while the student is enrolled at least half-time or for a 6-month grace period after the student graduates. It's very important to note that the One Big Beautiful Bill Act requires schools to prorate annual loan amounts in direct proportion to the student's enrolled credit load. This means that a student enrolling less than full-time, remember that full-time is 12 credits for NYU undergrads, will be eligible for a portion of their annual loan limit. For example, a student rolling in credits can access 50% of their loan limit. In contrast, because direct unsubsidized loans are non-need-based loans, interest does accrue for each disbursement, even while the student is enrolled in school. This means that the amount that the student borrows slowly increases while the student attends school, even before repayment begins. The loan proration requirement is the same for unsubsidized loans as it is for subsidized loans. The Department of Education caps the amount of direct loans a student is eligible to receive each year by their grade level. This applies to both direct subsidized and unsubsidized loans. In just a little bit, we'll talk about those limits.
The third type of federal direct loan is the Parent Plus loan. Parent borrowers may apply for a PLUS loan to help pay for the remaining costs of attendance not covered by other forms of financial aid. Not all students are offered Parent Plus loans, however. If a combination of scholarships and grants, with or without federal direct student loans, are enough to cover the cost of attendance, a Parent Plus loan will not appear on the award package. The total borrowing maximum for Parent Plus loans will be $20,000 per year per dependent undergraduate student. Parent Plus loans can be borrowed by one parent or a combination of parents, but it's important to note that the loans will be capped at $20,000 total per year per student, not per borrower. Because Parent Plus loans are credit-based, the parent borrower cannot have an adverse credit history. Repayment of PLUS loans begins after the final disbursement of each loan is made, unless the parent requests an in-school deferment. Interest accrues on PLUS loans while the student is enrolled in school, but also during periods of deferment. Parents may choose to pay the accrued interest while the student is enrolled in school or allow the interest to be capitalized, meaning that it's added to the loan's principal balance at the time that repayment begins. After a PLUS loan is fully disbursed, the loan servicer will notify parent borrowers when their first payment is due.
Multiple steps are needed to secure direct loans. Next, we will talk about how you can take any action to accept any of the federal direct loans that you may have been offered and that you plan to use. After your eligibility has been confirmed, action on your part will be needed for that aid to be utilized. NYU will never assume that you plan to use a loan. You, as a student and family, will need to make that decision. Loans will need to be accepted if you wish to utilize them, or you may decline some or all of the loans you've been offered. This is done in your NYU Albert student portal. If you aren't sure whether you need to utilize a loan for your family contribution, it's okay for you not to take any action at this time. They will continue to be in an offered status during the academic year in case you need them at any point.
For all federal direct loan types, if you only want to use a portion of the loan for your family contribution, you do not need to accept the full amount. It can be reduced during the accept-decline process. We thought it would be useful to show you a screenshot of what it'll look like. In this example of the accept-decline financial aid screen in your NYU Albert is the student portal where you can access information and records and take action on items related to registration, financial aid, and billing. For the loan in this example, if you would plan to accept it, you would need to select yes next to the accept subsidized loan. To decline the loan, you would do the opposite and select yes next to decline subsidized loan. Again, if you've not decided whether you'll need a loan for your family contribution yet, it will be fine to leave it untouched until the time that you do know that you'd like to use it. You would just need to take action at least 2 weeks before the end of the semester that the loan would apply for, so that you have enough time. We have enough time to process that for you. After the semester, the loan has finished, it'd be too late to accept the loan at that point, and it would be canceled. One thing to point out is that most offered federal loans are split evenly between the fall and spring terms unless specifically named. The whole annual loan amount will be what you see indicated. For a fall spring loan, meaning a loan that's simply called subsidized loan, like in the example you see here, and not fall subsidized loan or spring subsidized loan, the amount that you accept will be divided in half between the fall and spring terms. So in this example, a $3,500 loan would be split as $1,750 for the fall term and $1,750 for the spring term. If you accept a reduced amount, the example $2,000, That would be divided in half as $1,000 per term. For federal loans that will be listed separately, you would need to take action for each item separately in this case, meaning that each term's loan would need to be accepted or declined.
If a student was offered a subsidized and/or unsubsidized loan and plans to accept any portion of these funds, they will need to complete the following two items on the federal site, studentaid.gov, to allow for disbursement. One is loan entrance counseling. Entrance counseling ensures you understand the terms and conditions of your loan and your rights and responsibilities as a loan borrower. You'll learn what a loan is, how interest works, your options for repayment, and how to avoid delinquency and default. The other is the Master Promissory Note, or MPN for short, for the subsidized and unsubsidized loan. It is one combined MPN for both loans. The MPN is your promise to use the funding as intended towards the allowable cost of your education, as well as your promise to pay back the loan. MPNs are good for all subsidized and unsubsidized loans made during a 10-year period. If the student was offered a Parent Plus loan and a parent borrower plans to apply for any portion of these funds, the parent borrower will need to complete the following two items on studentaid.gov to allow for disbursement. One is the Master Promissory Note for the Parent Plus loan for dependent undergraduate students. The Parent Plus Loan MPN is a legal document that parent borrowers sign to promise to repay their loan. It also explains the terms and conditions of their loan, their rights and obligations as a federal loan borrower, and the consequences of delinquency and default. MPNs are generally good for all Parent Plus loans made for a student during a 10-year period. However, a separate MPN is required if the parent borrower has more than one student attending NYU at the same time. The other item is the Parent Plus loan application. The Plus application is a one-time document required of all first-time parent borrowers wishing to take out a Plus loan for their student at NYU. A separate Plus application is required if the parent borrower has more than one student attending NYU at the same time.
Students must be logged into studentaid.gov with their own FSA ID to complete their required loan documents, which are the Direct Loan Entrance Counseling and the Subsidized/Unsubsidized Direct Loan Master Promissory Note. Once logged in, students will navigate to the Grants and Loans menu, then to the Get a Loan submenu, where you will find the Loan Entrance Counseling and Master Promissory Note options. Conversely, parent borrowers must be logged into studentaid.gov with their own FSA ID to complete their required loan documents, which are the Direct Parent Plus Loan Master Promissory Note and the Parent Plus application. Once logged in, parents will navigate to the Grants and Loan menu, then the Get a Loan submenu, where you will find the Plus Loans, Grad Plus, and Parent Plus options, which is where the Plus application for parents of dependent undergraduate students will be found, along with the Master Promissory Note options.
Parent Plus loans are credit-based, and the federal government will perform a credit check during the initial Plus application process to determine eligibility. Parent borrowers with an adverse credit history may be denied credit. A parent borrower's credit history is considered adverse if you've had specific kinds of credit problems, including but not limited to recent accounts totaling $2,085 or more that are 90 days delinquent, charged off, placed in collection, or recent bankruptcy discharge, tax lien, wage garnishment, or foreclosure. Credit denied borrowers may still receive a Parent Plus loan by either obtaining an endorser or appealing the credit decision. Otherwise, the student may request an additional unsubsidized loan, which would provide up to an additional $4,000 or $5,000, depending on the student's grade level. Parent borrowers must be the biological or adoptive parent, or in some cases, the step-parent, grandparents unless they have legally adopted the dependent student, and legal guardians are not eligible to receive Parent Plus loans, even if they've had primary responsibility for raising the student. These additional unsubsidized loans, based on a parent's inability to borrow a Plus loan, are also subject to the new loan proration rules based on the student's enrolled credit load. Additionally, the student can apply for a private, non-federal loan. In most cases, a creditworthy cosigner will be needed. A list of private lenders can be found on our website.
Parent Plus loan borrowers who are denied and subsequently approved either by endorser or by an appeal are required to complete Plus loan credit counseling on studentaid.gov prior to disbursement. Plus credit counseling will help parent borrowers understand the obligations associated with borrowing a Plus loan and assist them in making careful decisions about taking on student loan debt. Another important point to know is about Parent Plus Loan Master Promissory Notes. MPNs allow for multiple year borrowing under the same terms. However, when an endorser is used, the terms of the master promissory note used for that specific loan is specific only to that loan. Therefore, each credit denied Parent Plus loan that is subsequently approved with an endorser will require its own unique master promissory note. For credit denied Parent Plus loans that are subsequently approved by an appeal, the master promissory note remains a master promissory note and is good for future Plus loans, whether they are approved again by appeal or if they are outright credit approved. No new MPN would be required.
Each time a student is offered a Parent Plus loan that the parent borrower would like to take out, the student will initiate the process by accepting the loan in their NYU Albert portal. This will allow the loan to originate or be sent to the Department of Education for processing and for a credit check to be performed. Please note that NYU does not perform the credit check, and the Department of Education does not inform NYU of the reasons that led to credit denials. They also do not share any adverse credit history details with our office. An adverse credit history email is sent by the Department of Education to parent borrowers who are opted in to e-correspondence within their studentaid.gov profile. We recommend that you're opted in. As previously mentioned, a credit by the Department of Education is good for 180 days. This means that if more than one Parent Plus loan is accepted by a student via their NYU Albert portal and originates within the 180-day time frame, a new credit check will not be performed, and the prior credit check will still apply. However, if a new Parent Plus loan is accepted and originates after the 180-day credit check period has expired, the Department of Education will perform a new credit check automatically. The final step prior to a Parent Plus loan being ready for disbursement is a process we call confirmation. The parent borrower must confirm the amount of each Plus loan they wish to have dispersed towards the bursar bill. An email is sent by the Office of Financial Aid with instructions on how the parent borrower will confirm each loan. Parents will be asked to answer a few personally identifying questions and to enter the desired dollar amount of each loan. Because parents must answer personally identifying questions, it's important that contact information be kept up to date with our office. For changes to parent contact information, the parent borrower must let us know in writing. An email from their personal email address would be sufficient. Student requests to update parent contact information will not be processed. It's important to know that most Parent Plus loans are offered as combined fall-spring or spring-summer loans, and that the amount a parent confirms for the loan will be evenly split between both semesters. Parents should be sure to keep this in mind when determining how much they need to cover each semester's bills.
So now let's take a closer look at the interest rates and loan fees. Reviewing these terms will help families determine which loans are more advantageous to them. And typically, you should borrow in the following order: subsidized loan, then unsubsidized loan, and then Parent Plus loan. Let's see why. New fixed interest rates are determined each year and applied to all loans first disbursed during the period from July 1st of one year through June 30th of the following year. For the period of July 2025 to June 2026, the fixed interest rate for subsidized and unsubsidized loans was 6.39%, and for Parent Plus loans, it was fixed at 8.94%. For the upcoming period of July 2026 to June 2027, the fixed interest rate for subsidized and unsubsidized loans is 6.52%, and for Parent Plus loans, that is fixed at 9.07%. So there has been a slight increase in these interest rates. Loan fees, also called origination fees, are fees that federal government charges to process your loans. These fees are based on a percentage of the loan amount at the time of each disbursement. You can see here that the plus loan fee, or the fees for the period of July 2025 through June 2026 are 1.057% for the subsidized and unsubsidized loans and 4.228% for the Parent Plus loans. These fees remain the same for the period of July 2026 through June of 2027. To illustrate how loan fees work, we'll use a subsidized loan and a Parent Plus loan as examples. For the subsidized loan, the total loan for the year is $3,500, so $1,750 for fall and $1,750 for spring. This is based on full-time enrollment in each term. After the 1.057% loan fee is deducted from each disbursement, a net amount of $1,732 would disperse to the student's bursar bill. For the Parent Plus loan, the maximum of the loan for the year is $20,000. So that's $10,000 for fall and $10,000 for the spring term. Again, this is based on full-time enrollment in each term. After the 4.22% loan fee is deducted from each disbursement, a net amount of $9,578 would disperse to the student's bursar bill.
While NYU will offer funds to cover any remaining costs, federal regulations requires us to adhere to annual and aggregate loan limits. Students borrowing federal direct loans, including subsidized and/or unsubsidized, are subject to two kinds of loan limits. One is the annual maximum loan limit, which restricts the total amount of federal direct loans that may be borrowed during a single academic year, which is fall, spring, and/or summer. The other is the aggregate maximum loan limit, which restricts the total amount of federal direct loans that may be borrowed over a student's college career. The maximum annual amount a student can borrow in federal subsidized and/or unsubsidized loans is determined by their grade level and dependency status. Dependent first-year students or freshmen are eligible for up to a total amount of $5,500, of which a maximum of $3,500 can be in the form of a subsidized loan. Dependent second-year students or sophomores are eligible for up to a total amount of $6,500, of which a maximum of $4,500 can be in the form of a subsidized loan. Dependent third and fourth year students or juniors and seniors are eligible for up to a total amount of $7,500, of which a maximum of $5,500 can be in the form of a subsidized loan. A dependent student's parents may borrow federal direct Parent Plus loans up to a maximum of $20,000 per student per year. This $20,000 can be borrowed by one parent or can be split between multiple parents. There are no changes to the aggregate loan limits for students. However, parent borrowers will now have a lifetime or aggregate loan limit for Parent Plus loans. The $65,000 lifetime limit applies per dependent student, not per parent borrower. This means that the $65,000 limit is shared across all parent borrowers for each individual student. A new lifetime combined limit for student borrowers has been instituted as well as part of the One Big Beautiful Bill Act. This lifetime cap of $257,500 includes all student borrowing across all careers. This means that students may borrow up to $257,500 in federal student loans across their undergraduate, graduate, and/or professional careers. While this cap does not include Parent Plus loans, it does include all previous and future borrowing of federal subsidized loans, unsubsidized loans, Perkins loans, and Graduate Plus loans. Students should be mindful of this limit if they desire to further their studies beyond the baccalaureate level.
A student's financial aid awards, including their federal student and parent loans, may not completely cover their cost of attendance. Student loans from private lenders may be an option for students who need additional loan funding above their subsidized, unsubsidized, and/or Parent Plus loans that the FAFSA offers. or for students who are not eligible for federal student loans, such as international students. You will not see private loans offered as part of a financial aid package, so if you're interested in a private student loan, you would need to research different banks and lenders to decide for yourself which loan you would like to pursue. NYU offers a preferred lender list on our website, and you can apply for a private loan with the lender of your choice via Elm Select. We encourage students to carefully evaluate their options when deciding whether or not to borrow a private educational loan. Unlike federal direct student loans, each lender and bank will offer different types of educational loans with different terms and fees. Private loans are student loans offered through a number of different banks and lenders. They are not through the federal government. Terms and conditions of these loans may vary and are determined by the specific lender you are applying with. This includes interest rates, repayment options, fees, forgiveness options, etc. They will require a credit check in order to qualify, and they will be in the name of the student, but often require a qualified US-based cosigner if you're unable to be approved on your own. Some lenders will also allow loans to cover past due balances for previous semester bills. It's important to know that private student loans require certification by the Office of Financial Aid after you've been approved, and this process can take up to 3 weeks. Our preferred lender list is provided as a resource to assist students in comparing private loan options. None of the lenders on the university's preferred lender list are affiliated, and you are not required to borrow from private education lenders on the list. It's also possible that you could obtain better rates or terms from lenders not on this list. Lenders included on the list were selected through a formal request for information process. If you are looking at private loans, we always encourage you to be sure you understand the terms and conditions of these loans before agreeing to borrow.
While financial aid is responsible for the offering and processing of your aid, inevitably these funds will be processed toward your bursar bill. Let's take a look at your aid from a financial aid and a bursar perspective. Oftentimes, families utilize federal loans to assist with any remaining costs not covered by scholarships, grants, or work study. These costs may be billed by the university, such as tuition, fees, and on-campus housing, or may include indirect expenses the students may incur. Some examples may include books, supplies, off-campus rent, and living expenses. In reference to securing your aid, please decide on the amount of loans your family needs. In order for aid to disperse to your bill, you must follow all steps to secure your aid by accepting the loans and completing all required documentation. Processing of your paperwork can take 7 to 10 days, and as such, we suggest that you try to complete this process today or on the date you decide to accept your loans. By accepting and completing all documents as soon as possible, you allow NYU and the Department of Education enough time to process federal aid prior to your semester bill being released. Loans will generally be offered as a fall-spring or spring-summer loan. In this case, both portions of the loan will be accepted at the same time. Under certain circumstances, a loan may be offered per semester as a fall-only or a spring-only loan. You must accept each loan, as accepting one semester's loans does not mean the other semester's loans will be automatically accepted for you.
Bills are typically released in mid-July for the fall term and in December for the spring term. By processing your aid, your initial bill should reflect any anticipated aid through that point. While you may decide to accept your loans at a later date if originally they weren't needed, please be aware that anticipated aid and disbursement will be delayed. Families may be expected to pay out of pocket if their remaining costs and your loans aren't processed. Keep in mind, loans that are set up as combined fall and spring, which are the majority of the federal direct loans that are offered, requires no additional documentation for the spring portion of your loan to disperse. You must accept these loans 2 weeks prior to the end of the spring semester. However, if you're ever offered a semester-specific loan, such as a fall subsidized loan, you will have until 2 weeks prior to the fall semester ending to accept these loans. After the fall term ends, federal regulations prohibit schools from originating new loans for that completed period of enrollment. Financial aid must first be applied to items that you owe on your bursar's bill. If all billed items aren't covered by financial aid, you can pay out of pocket or contact our office to see if additional loan funds are available. Excess funds will be sent as a refund. Health insurance charges that appear on your bill are not initially factored into your offered loan amounts. If you plan to use NYU insurance and need a loan to cover it, please email us your request. Additionally, don't forget that you'll have a deposit credit if you've accepted your offer of admission and a housing deposit credit if you'll live in NYU housing. Deposits cannot be paid with financial aid. These deposits are applicable toward the fall semester bill. In the spring, your bill will be absent of these credits. You can either pay the same costs out of pocket if your bill isn't covered by financial aid, or you can contact us to determine if any additional loan may be available. You can request additional federal loan funding by completing the federal aid request form that will be available on your NYU Albert student portal.
Disbursement means that your aid has been credited to your bursar bill. While we initially anticipate aid on your bill, actual disbursement occurs approximately 10 days prior to the start of the semester per federal regulations. In order for it to disperse, you must have accepted your financial aid and completed all of your required paperwork. You will also need to be enrolled in the number of credits your financial aid is based on. This means if your financial aid is based on 12 credits or more, which is considered full-time enrollment, and you are only enrolled in 10 credits, your financial aid will not disperse. You will need to either enroll in at least 2 more credits or notify the Office of Financial Aid via the NYU Albert Portal Finances link that you will only be enrolling in 10 credits that term so we can update your financial aid. Additionally, please complete any outstanding items on your Albert to-do list, as this may delay your disbursements. If there is any financial aid money left over on your bursar bill after it's been paid, you will receive a refund 3 to 5 business days later. Refunds to students will be issued in the form of a check unless the student has opted to receive funds via direct deposit. We strongly recommend you sign up for direct deposit through the office of the bursar, as it's the fastest way to receive your refund. If the refund is from a loan in the student's name, it will be issued to the student. If the refund is from a Parent Plus loan, the refund is issued to the parent borrower by paper check. It's very important to notify both the Office of Financial Aid and the bursar's office of any changes to a parent borrower's contact information. We want to avoid a refund check being mailed to an old address. Keep in mind that refunds aren't just extra money. They're meant to cover educational expenses that aren't on your bill, such as books, supplies, off-campus rent, transportation, and other living costs. This is where the live like a student mindset really matters. Avoid splurging on things you don't need. Don't spend all of the refund at the start of the term. Instead, plan ahead. Set a budget for the semester so you're making smart financial choices. If the refund comes from a Parent Plus loan and your parent receives the money, they should distribute the funds to you as needed rather than handing them all over at once. Parents can use this as a great opportunity to help their student learn about budgeting and money management.
So here are some final reminders and tips before you go. We strongly encourage students and parents to borrow only what is needed to pay for billed and unbilled educational living expenses and no more. If there is an additional credit amount remaining after paying for what is needed, you have the option to return those excess funds to the lender. You can do this by completing a Return to Lender request form on the Finances tab of your NYU Albert student portal. The Office of Financial Aid will cancel the requested amount of loan on your behalf. Unwanted excess funds can be returned to the lender by the school up to 113 days after each disbursement is made to the bursar bill. After that, the excess funds can be returned by the borrower in the form of a one-time payment directly to the lender. Remember that loan fees are deducted from each disbursement before the funds are credited to your bursar bill. There's a loan fee calculator on the NYU website that will tell you the gross amount you need to borrow if you're looking for a specific net disbursement amount and vice versa. Also remember that interest starts to accrue for unsubsidized loans and Parent Plus loans at the time of disbursement on each loan that you take. Loans can only be originated up till the end of the specific term you'd like to apply the funds. For this reason, any loan that you need to utilize to cover a specific term's bill must be accepted via the NYU Albert portal at least 2 weeks prior to the end of that term. This is to allow enough time for processing before that deadline. Once a term has ended, federal regulations prohibit schools from originating new loans that would have covered the period of enrollment that ended. Loans that remained in an offer status on your award package will be canceled once that term is over. Another federal financial aid regulation prohibits schools from making the first disbursement of a loan more than 180 days after a term has ended. This means that if your loans have successfully originated prior to the last day of a particular term but have not yet dispersed due to missing loan documentation, there will be a limited window for those missing loan documents to be completed before those loans are canceled. We encourage students and parents to complete their loan documents in a timely manner.
Studentaid.gov is the federal student aid portal for both student and parent borrowers. This is the site where your FAFSA will be filled out each year and where student and parent borrowers complete the required loan documents we've already spoken about. Studentaid.gov is also a very important resource for borrowers while the student is in school and once they leave school. A record of federal loan borrowing will be available to students and parents, which is important information to know as students approach graduation. The federal site also has very useful information, such as federal loan repayment options, as well as loan consolidation information and application.
In order for offered financial aid to be processed, students must log into their NYU Albert portal and accept or decline their offered financial aid. This would be done via the Finances tab of your NYU Albert portal. Students are encouraged to check their NYU Albert portal often to see if there are any outstanding documents that need to be completed or any financial aid items that need attention. For example, this is where a student will see if a new Parent Plus Loan NPN is required for any reason, or if we haven't received the student's direct loan entrance counseling. These are just a few examples of what financial aid items might be requested or announced to students on their NYU Albert portal. Also in the Finances tab, students can find links to various financial aid forms, such as requests for additional federal loan funds and federal work-study eligibility. These forms, however, will only appear for students who are eligible to complete and submit them. Your NYU Albert portal is not just for financial aid. Information and links related to your academic and registrar data, as well as your Bursar account, can be accessed here. This includes any holds that have been placed on your account.
So it looks like most questions that were submitted through the Q&A box have been answered. However, if your question did not get answered or if you have further questions, you can reach out to us by using the contact information that we will be sharing shortly. In addition to the submitted questions, we would like to share with you a few of the most frequently asked questions that we encounter. Question 1. My parent and I completed our loan documents, but my aid hasn't credited to my Bursar bill. How do I confirm if there are any steps missing? After the student or parent borrower has completed any of their required federal loan documents on studentaid.gov, you can navigate to the My Info section of studentaid.gov and then to the My Documents section. There, you'll be able to view all documents that have been completed under the FSA ID of the borrower who is logged in, including the FAFSA report, completed loan counseling, completed master promissory notes, and completed PLUS applications. Also, at any point after you've accepted your financial aid, including your Parent Plus loan, you can log into your NYU Albert portal and look at your to-do list. If there are any outstanding items that your parent must complete for their Parent Plus loan, such as the master promissory note, PLUS application, or confirmation, it will be shown there. This is true as well for any outstanding items the student needs to complete for their loans.
What is considered adverse credit history in terms of applying for a Parent Plus loan? A parent borrower's credit history is considered adverse if you've had specific kinds of credit problems, such as recent accounts totaling $2,085 or more that are 90 days delinquent, charged off, or placed in collection, or a recent bankruptcy discharge, tax lien, wage garnishment, or foreclosure.
My parent is not willing to take out a Parent Plus loan for me. What are my options? Students whose parents are not willing to apply for a Parent Plus loan are not eligible for an additional unsubsidized loan, like students whose parents apply but are credit denied. In this case, students can look at private, non-federal loan options. Students can go to the NYU website and do a search for the private loans section of the financial aid site for more information. Please note, though, that in most cases, a creditworthy cosigner will be required.
I am an independent student according to my FAFSA. Can my parent apply for a Parent Plus loan? The answer to that is no. According to federal financial aid regulations, you are considered an independent student, and only parents of dependent undergraduate students are eligible to apply for a Parent Plus loan. As an independent student, you are eligible for a slightly higher amount of unsubsidized loan than a dependent student. Another option would be to look into private non-federal loans.
Can I receive my federal loan funds early so that I can pay for my off-campus apartment deposit? No, federal regulations prevent a school from dispersing federal financial aid more than 10 days prior to the start of each semester.
Will I be able to reduce or cancel a loan that I accept if I later find that I don't need all of it? The answer to that would be yes. If you decide that you don't need all of the loan funds that you accepted prior to the funds being dispersed towards your bursar bill, you can email the Office of Financial Aid to request to have the specific loan reduced or canceled in full. If you realize that you don't need all of your loan funds after the loan has dispersed towards your bursar bill, regardless of whether a refund has been issued or not, you will need to request a reduction or cancellation via an online form on the Finances tab of your NYU Albert portal.
What happens to my loans and financial aid if I drop a class or withdraw completely from school? Withdrawing from all classes or dropping a class at any point after the drop period will negatively impact your completion rate and possibly affect your eligibility for future financial aid. Additionally, if you drop a course or withdraw from the semester, you may be required to return some of your financial aid, including federal loans and the Pell Grant.
The $20,000 Parent Plus loan, along with my other financial aid, won't be enough to cover my bill and expenses. What can I do? We recognize that the new Parent Plus loan annual limit per student is not ideal for some families. Private student loans can help bridge the gap between the financial aid you've already been offered and your bursar bill, as well as provide funding for non-billed expenses like books, supplies, personal items, and travel. Information on private student loans can be found on our public website. Simply do a search for private student loans after navigating to nyu.edu.
The Office of Financial Aid is here for you, so please let us know if we can be of service. For students admitted to our New York campus, you can reach us by phone at 212-998-4444 or by email at financial.aid@nyu.edu. Our phones are open Monday through Friday from 10 a.m. to 4 p.m. Eastern Standard Time. But keep in mind, Monday and lunch hours are our heaviest phone traffic times. So calling in the morning, Tuesday through Friday, would be your best bet. Students in our Shanghai campus should call the NYU Shanghai Office of Financial Support at 212-998-2838 or email them at shanghai.financial.support@nyu.edu.
We really appreciate you taking the time to join us this evening. If you have any other questions, we encourage you to send our office an email as phone wait times during this busy part of the year can be long. We value your perspective. Help us improve our direct loan webinar by completing a quick 8-question, 2-minute survey, using your phone to scan the QR code to help us tailor future content to our student needs. Please have your university ID number, which begins with an N1, in order to complete the survey. Thank you all for attending today, and on behalf of the Office of Financial Aid, welcome to NYU.